Michael, comma, are you using the Zoom link I sent out just recently? Question mark. I thought you were signed on and I did not see you. Zoom gave me a different link. Hello, Lisa. How are you? Lisa Perez.
Can you hear me?
Now I can hear you. How are you?
I know about you. I just thought I'd listen in while I'm here at work, but
Well, you can certainly do that. I appreciate that. You got the new link for Zoom. I'm a
yeah.
little worried that I don't know why Zoom gives me a different link. You know, I had it set up for weekly meetings and then after a certain period of time, it expires and then it gives you a new link when I reset it. So
I didn't know that. But you sent it on the email, so if people
yeah,
yeah.
maybe the old link works too. And I sent it out again saying, try this link. It
Yeah.
might work better. Did you get the text or you got the email?
I got let me show you. No, I can't show you, but let me see if I got a text also, yeah. I'll try the
Well, the text will work for sure. It was the first email I sent where it was the usual link, and the usual link didn't. I don't know if it works, but Susan Schmidt's coming on. She's from Tycor Title. She must have gotten my message to try this different link.
Hi Susan. Nicole.
Nikki found it, so I guess people are getting on. Hi, Nikki. How are you? Yep, she's got her headset. Hello, Nikki.
Hey there.
Yeah, and Susan, you're on.
Hi guys.
Yay, that's awesome. Did anybody try the usual Zoom link? The first one I sent out, maybe it worked, but
No, I went straight to the second.
the second one. Yeah, okay. All right. Well, we got it squared away. Okay, well, I know Michael is dealing with computer support and he may be joining us shortly. A few other people are likely to jump on as we get started here. I want to thank you all for being here on my trial run through on my slideshow on creative real estate finance. I have to give credit to Susan Schmidt, who has joined us. Lisa and Nikki, I don't know if you've met Susan before. She's talked with our mentees before. She is the escrow officer at Tycor Title, and she has been doing trainings for real estate professionals, real estate agents and investors through Tycor Title. However, Tycor Title doesn't allow her to speak directly to consumers, buyers, sellers, and investors without a license. So I said I wanted to do this type of training, and she actually helped me put together this slide presentation. So thank you, Susan.
You're very welcome.
Yeah. As I run through this, I expect this to be very interactive. So if you have any questions, you can jump in at any time. Susan, if you have anything you want to add to anything that I'm showing or people are asking, just jump in at any time. You don't need to be muted for this. So I'm going to go ahead and share my screen. Let's do that. Well, that's not it. Let's go there. Okay, so here we go. Now that's the end. You don't want to see the end. You need to go up here to the beginning. All right. Can everybody see the screen?
Yep.
Yes.
All right, excellent, excellent. Well, today we're going to be covering seller financing, loan assumptions, and mortgage wraps. So these are some of the creative ways to acquire or sell real estate that most real estate agents don't know about. So we're not talking about a buyer getting a traditional mortgage. We're talking about alternate ways of financing a real estate purchase. So I think this is pretty exciting stuff. Let me start again. All righty. So first, my disclaimer. As you all know, I am not an attorney. I'm not a financial advisor. I'm not a CPA. So this presentation is strictly for entertainment and educational value. And always consult with legal or financial professionals for any creative real estate deals you may be doing. And since you are mentees, I should mention that whenever I'm doing a creative real estate deal, I do advise the buyer and the seller to review it with an attorney. I always advise them to do that. They may or may not do that, but I always advise them to do that. So most of you know me. I have 20 years of experience as a real estate professional. I started as a real estate investor. I've done some property management for clients in the past, as well as I self-manage the rentals that I own. I'm primarily in residential real estate, but also have some experience in land, mostly pre-development, small commercial development and acquisition, Airbnb, short-term furnished rentals, and I recently built a dadu. The certifications that you see at the bottom, most all of them I've acquired since coming to EXP. So that's something that you all might want to look into, some of those certifications as well. Okay, so what is the current real estate market like? Right now, it is a seller's market. There just isn't enough inventory. There's not enough homes for sale. Home prices are still going up. There's high buyer demand, but mortgage rates are still pretty high. And a lot of homeowners either have no mortgages or have historically low mortgage interest rates on their mortgages. And despite the fact that it is a seller's market, roughly 30% of all listed properties here in King County have been on the market 60 days or more.
And that excludes vacant land, Wendy.
Oh, it
So,
does exclude vacant land, because that would be, a lot of that would be over 60 days on market.
yeah, for sure. It's only for houses, townhomes, condos.
Right. And I did not look at commercial
Yeah.
and do the stats on that. So obviously, if you're a seller and you're sitting in a seller's market, a pretty strong seller's market, and you've been on the market 60 days without an acceptable offer, you're going to be much more open to negotiation. You're going to be much more open to creative terms, not just price reductions. Most agents who don't know about creative finance just think your only option is to reduce price, but that's not true. A seller or an investor who's selling a property might consider seller financing. Why? They're more likely to get a higher purchase price. They're more likely to get more income over time. They're more likely to get a quicker sale and have a larger pool of buyers. For buyers, the reason to do seller financing is it's way more affordable. They get lower mortgage, lower monthly payments, which is what it's all about, lower closing costs, and they could have some flexible repayment terms. So lots of good reasons to look at seller financing. So what is seller financing? So seller financing can occur where the seller acts as the lender 100% by providing financing for a buyer to purchase the property. And this is great if the seller owns the property free and clear. But a seller could also do seller financing if there's an underlying mortgage, if they have an underlying mortgage with something that's called a wrap. And that's where they provide the financing, but the seller continues to make payments on the mortgage after closing. So, hello, Giselle. Giselle's joining.
Hello. I was joining the other link and I just realized it wasn't working.
Okay, well, thank you for letting me know that. I have
Yes.
changed it for the future for us.
Okay,
Giselle is an investor. So far, Giselle, we've just gone through what is seller financing, what are the benefits of seller financing, my background. So now we're getting into the part that you are really going to be excited about. So this is actually a real email that I send out when I'm making a seller finance offer to a seller. Now, in this case, my email would have, the property address at the top, and then I state that I represent a client. And if the seller is willing to consider financing, here are the terms. If they are, then I'm going to go look at the property. Typically, I don't go look at the property in person until I've gotten at least some indication that a seller is willing to do seller financing. Now, what's interesting here is as you look down this list of terms, everything that's in yellow, which is basically every term, is negotiable. Every single term in a seller finance deal is or can be negotiable. So, for example, in this case, I offered full price on a listed property. So what was the seller looking for? It was looking for $430,000. I offered $430,000. Now, what you offer may vary depending on whether this is a listed property or an unlisted property. But my goal is to get a seller to say, yes, I would consider seller financing. We can worry about any adjustments to the price later, but I want to get it under contract. I want an yes. Earnest money, generally that's, on a listed property, brokers on the other side expect you to put anywhere from 1% to 3% down as earnest money. Again, if it's off market, a lot of investors will try to make that earnest money as little as possible or delay paying it. They don't pay it right away. But in this case, I just did something pretty standard. Now, in this case, I offered a 20% down payment. So again, I'm saying to seller, I'm serious. I've got a lot of money to put down. It's a significant amount I don't want to lose. And if you're interested in seller financing, that's what you're going to get up front. Normally, if it's a listed property, I would say at least 10% down, because you need at least 10% to cover the seller's closing costs and commissions when it's a listed property. So 10% is always good, gives them a little bit to walk away with, but not much. Now, in this case, because it's seller financing, there's no underlying mortgage. The seller's providing 80% of the cost is being financed. And what I suggested here was interest-only payments of $1,290 per month, cash out in 5 years. Well, simple interest means I am not paying anything down on the principal. I am only paying interest, which if somebody owns it free and clear and they're not looking for a lot of money right up front, they might go for simple interest. This interest was equivalent to 4.5%, but obviously you can vary that. Anybody jump in if you have any questions about any of this as I'm going through this, because this is my strategy. I send the email out, they say yes or no. We're going to pursue it or not pursue it based on what a seller's going to say. Usually I have a home inspection contingency. There may be other inspections and contingencies, but I state this is my contingency. And then I have a relatively quick closing. I just changed the date on this one, depending on what the seller wants. So all these terms are negotiable in seller financing. The seller is the bank in this case. So you can offer any of these terms can be different, that any of these terms can be what works for if you're making the offer, client is making the offer. Any questions on that?
This would be interest only for 5 years, and then the whole principal would be due.
Exactly. Exactly. Now, why would I do that, Nikki? Is there a reason you think I would do that? There's probably a couple of reasons. Anybody know the reason why I might not care about paying off any principal?
If if you think that you're going to come into some money later down the line to be able to lock down the property at the moment.
That's one possibility. I'm much more likely to get a loan. I'll refinance the deal. I'll get some kind of mortgage or a permanent financing on it. But then I'll have to start paying principal down. Okay, anybody have any other ideas about why I'm not worried about not paying principal down? And I can tell you why the seller's not worried about it either. Anybody? Okay, so one reason is because if home prices keep going up, then maybe I don't need an 80% loan. When I refinance 5 years from now, that property may be earning equity. It's worth more than what I offered 5 years before. So now maybe I only need a 70% loan to value, or a 75% loan to value, or whatever it may be. So I may have to take out a smaller loan in essence because of the equity in the property. That's one reason. One of the things I say to sellers on the simple interest only, whether they have a loan or they don't have a loan, is you're going to get the same amount of money. It's the same amount of money. It doesn't matter if I'm amortizing it or not amortizing it. And that's why it's so good. It's nice to have a significant down payment, because I don't want to lose that money. But for the seller, it doesn't really make a lot of difference because they're getting the same amount of money over time. Does that make sense? Everybody's wrapping their brains around that?
Well, when they are actually making a little bit more, right? Because the interest in the financing.
Right. They're earning interest every every month, actually, but every year they're getting 4.5% interest, which they can't get in the bank. It's very hard to find that kind of interest rate on money that's sitting in the bank. So, okay, this one is fun. This is from a previous PowerPoint that I did for REAPS, the Real Estate Investors Group here. When I think back on my career, and I've done a number of creative real estate deals, but there's one deal that really sort of catapulted me to a new level, a higher level. And this is the one for me. Giselle, I was talking with Wayne Prentice about this, and he said the same thing. He knows the one property that made the biggest difference for him and catapulted him to a whole new level. So this is a property I bought in Ballard. I think it was 2011. I may have said 2012, 2011, 2012. Susan, do you remember what was happening in the market in 2011?
We were still dealing with a lot of foreclosures because of the crash that happened 2008, 2009. It was a REO frenzy.
It was an REO frenzy. We were in a recession. Didn't they call it the Great Recession now? We were in a recession. Guys, people make money during the downturns. You can make a lot of money during the downturns. So I found this house in Ballard that nobody wanted to buy. And actually, it had been on the market. I mean, I think it was like maybe 40 days. It wasn't all that long. 40 days, but they didn't have an offer. The woman owned it free and clear. She wanted $409,000. I offered her $409,000. I didn't even put 10% down. I put $35,000 down, and I got a private loan from a private lender. I paid 7% interest only on that private loan. I think I paid him off in a year though, but still, I forgot I even had a private loan on it. So I put no money down, and the seller agreed to 5% interest only for 5 years. She also agreed to a $7,000 concession because the side sewer needed repair. So and this is what it looked like. Pretty much well, I can't say which are, this is clearly under construction here. This was the little ADU downstairs. It had 5 rental bedrooms, but really classic 1920s home in Ballard. I spent about $12,000 fixing it up. My monthly payment was $2,087. I think I covered the utility costs. I don't even remember if I did, maybe just in the beginning. And it brought in $3,700 a month because I was renting by the room. And that's really important. So during the first 5 years, I had over $1,000 a month in cash flow. And this is kind of before, after. So if the previous owner had rented this out, I don't know if this is blocking your view. I'm going to move this here. The previous owner had rented it out at $2,300 a month because she just rented the house, right? And the fact that I rented it by the room, I was able to bring in $3,700 a month. So room rentals were about at $625 a month. I guess that did include utilities, internet, maintenance, monthly cleaning, up to $500, 5 legal bedrooms, basement ADU. I converted a sunroom into a bedroom. And the property managers were in this room here in the basement, and they were making repairs in exchange for reduced rent. So here's the financials on this again. Move this around. Purchased it for $409,000, simple interest only, 5-year cash out, $3,700 a month in rents, cash flowed $1,000 a month. Even after I cashed her out, I kept the house for a few more years. It still cash flowed at about $1,000 a month because rents went up. My loan was not for the whole amount. It was a reduced percentage on the value of the home. I made $60,000 in cash flow over the 5 years that I offered simple interest to my seller. Because it was simple interest, I could get it to cash flow $1,000 a month, right? I couldn't have done that if I amortized it. How much did the seller make in interest over her $409,000 purchase price? In 5 years, she made an additional $125,220 in interest. And then what happened was I eventually sold it in 2019 for $800,000. I did a 1031 exchange into a West Seattle rental that I still own. It's easier to manage. It was cash flowing more at the time I bought it, like $1,500 a month. It's now worth somewhere right around 1.4, 1.5 million. I built a Dadu, which is now worth 700,000, and it cash flows $500,000 a month. And that's all because I purchased this one property on seller financing during a down market. So pretty exciting, right?
Can I ask a
Yeah,
question?
that's really cool.
That's really cool. That's real life there.
Could I ask a question?
Absolutely.
If you go back to the previous slide, please.
Let me
so I
see if I
guess-
can
I
figure
guess
that
I-
out. Here we go. Yes.
Sorry, I just wanted to see how the thought process. So when you do the seller financing on this, do you have a contract between you and the seller that you're gonna have it for example, the 5 years? And then you
Yes.
turn it around and put it into an actual loan?
Yes, the paperwork, guys, because I designed this presentation primarily for buyers and sellers, I wasn't going to go deep into paperwork at all. But you guys would be surprised how easy it is to do this paperwork. It's all standard MLS forms. That's the best way to do it, is just everything's transparent, everything's on the up and up. And a good, competent escrow agent like Susan Schmidt, who's seen a ton of creative deals, can help you make sure you've got the paperwork right. Does that answer questions for now? We can go back over it. That can be another session with you all. I can actually show you the paperwork. It's so simple. Giselle, you've used it, right? She might not be in a place she can answer. Okay, so we're going to move on.
Sorry, I'm about to get in the car. No, I haven't used it yet, Wendy, but I have seen, I think, from Tycor's presentations on seller financing. I've been in their classes. They're great.
Okay,
Good, thank you.
good. Now, why is this not advancing? Here we go. So what if the seller has a mortgage? So what I learned from Susan is that most government loans can be assumed. FHA, VA, and many USDA loans are assumable. So a loan assumption, where you assume a loan, it's a purchase transaction where the buyer takes over the payments on a seller's existing loan rather than obtaining a new loan. So, you know, a lot of FHA, VA, USDA loans out there are at 3%, 2.5%, 4%. Now, some loans are not assumable. Conventional fixed rate mortgage loans are not assumable, and reverse mortgages are not assumable. But in order to assume a loan, the buyer does have to qualify. They have to qualify with the seller's lender, and they may be required. Many of these loans, the original terms were you needed to be an owner occupant. So you may be required to be an owner occupant as opposed to an investor taking over one of these loans. So pretty much a lot of the same benefits for sellers, higher sales price. They're no longer obligated on the loan. Now it's in someone else's name, quicker sale. They're able to move on. For buyers, they can afford to look at higher priced properties. Monthly payments are much more affordable. No appraisal is needed. No lender's policy is needed. And the loan term might be only for 25 years, 23 years, 20 years. It's less than 30 years to pay off the loan. Isn't that a great deal? So if you are going to assume a loan, there will be a sales price and then a current loan balance. And that difference is what the buyer will be required to come up with as a down payment to cover that gap and take over the loan. Well, there's a lot of ways that gap could be smaller, that gap could be large. The buyer could come up with extra cash. They could ask the seller to do a second lien, basically do a carryback on that at a probably a higher interest rate. The buyer could take out a HELOC or a second mortgage or withdraw money from their 401k. Susan came up with lots of great creative ways that someone could finance that gap and then assume the underlying financing. But apparently there is a company called Assumption Solutions, a local company that someone might go to if they have questions or trouble getting through that loan assumption process. Anything you want to add on that, Susan?
I mean, they could, but I mean, if I'm a real estate agent, I'm only going to use that if you're so busy you don't have time to check on it yourself, because most of the stuff, like if you're going through Ticor, we're going to do a lot of what they do, and they're going to charge your client $750. I think it's great. We're just using them now, but I'm like, sometimes I think it would be appropriate and sometimes I think it's not going to be appropriate. That's all I have to say about it. It's like, I don't know. Because the lender has to do most of the stuff, but it's great if you're a busy agent and you don't want to deal with it at all. Then you've got somebody who's going to take the place of that loan officer, that local loan officer, and kind of hold the buyer's hand through the process, and then should be reporting back to you about where we're at.
Okay, good. All right, so let's look at some examples. Let's see. Now, of course, it doesn't want to advance. I think it doesn't want to advance because I've moved all these things. There we go. All right, so here's an example of a loan assumption. Let's say the purchase price is $1,275,000, very realistic for Seattle. And the current loan balance is $1,162,455. They haven't owned it all that long, but it's at 2.75% interest. So a buyer's monthly payment, if they put 10% down, roughly 10% down, well, a down payment of $112,545. Then their monthly payment is going to be $4,864 versus $7,734 at 7% interest. So that's a huge savings. They're going to be saving almost $3,000 a month on payments, assuming a loan that's at this really low interest. This is why that loan is a huge asset for the seller. And it is a huge benefit for the buyer if they can just assume that loan. So if they put that amount down, their total closing costs, the buyer's total closing costs in this example ended up being less than 10%. The seller still netted on they'd only owned this property a short period of time, they still netted almost $27,000. So have any of you heard of subject twos? Giselle, have you heard of a subject two?
I have.
I put this in here because a lot
Yes,
of,
I have.
yeah, a lot of investors have heard of subject to transactions. And a subject to transaction is when a seller is paid equity as closing, and the buyer takes over the seller's payments on the loan without qualifying. Remember, on the assumable loan, they had to qualify. And the problem is that the seller doesn't get taken off this loan. They remain liable on the loan for no way to get the property back in the event of default. And this is a significant issue for a seller. And therefore, many title companies will not close these transactions. So there are other ways to get around an existing loan without doing a subject to transaction. Susan convinced me we shouldn't be doing these. So a buyer can use something that's called a wraparound mortgage. And that's basically a home loan that allows a seller to maintain their existing mortgage while the buyer's mortgage wraps the existing amount owed. So it means that the buyer will make monthly payments directly to the seller, and the seller pays those to the lender. And it's often at a higher interest rate than the original mortgage, or it covers a gap between the loan balance and the purchase price, which the seller is willing to finance. So if for whatever reason the VA loan can't be assumed, or there's just too much equity, it can be wrapped. Conventional loans can also be wrapped with something that's called, in legal terms, it's called a real estate contract. Also known as contract for deed, which I think makes it less confusing than the paperwork we all use as real estate agents. Nevertheless, Susan tells me that the official legal name is a real estate contract. And FHA and USDA loans may be assumed, but HUD does not allow them to be wrapped. How would HUD even know, Susan? She doesn't know.
No, I agree. And remember, if you have one that you want to wrap, take it to a real estate attorney, and we have those names of real estate attorneys that will close those for you. We just can't, because of a memo that came out 100 years ago saying you will not wrap FHA loans. And because we're an escrow company, we can't afford to be on a list of companies that can't complete newly originated FHA loans. But real estate attorneys don't worry about that. So we always have a solution for you. You just write up the deal. We'll help you figure it out and how to get it closed.
All right. Thank you for explaining that, Susan. So when we say something's allowed or not allowed, it also has to do with whether you can get a closing agent to insure it and close it.
Right.
Which is great. Okay, so there's two ways you can do a wrap, and I have not done a wrap. So I think this is pretty exciting. One is through a note and deed of trust. And that means the title transfers to the buyer at closing, even though you're wrapping the underlying financing for the lender. So it is a promise. There's a promissory note, which is a legally binding promise from a borrower that they're going to repay the lender's loan. And the deed is an agreement that the mortgage lender is going to hold the legal title until the loan is paid in full. So that is the note and deed of trust. A real estate contract, on the other hand, the title does not transfer at closing. The seller stays on title, although the buyer has all the rights of possession and the right to acquire title. They have many of the ownership benefits. in accordance with the terms of the contracts, and they continue to make periodic payments until the loan is paid in full. And until the loan is paid in full, the seller is on title, and that title doesn't transfer until the loan is paid off or it's paid in full. Any questions about that? We're going to look at some examples. So here's an example of a low equity wrap. And this is a great example because this buyer was in distress, right? And this buyer needed to sell. They had so little equity, and they even had a loan delinquency that they needed to pay off. And they probably just needed money to live on. And so an investor approached this seller, and the seller said, I need $20,000. When all is said and done, I want to walk away with $20,000. I will sell this to you for $340,000. I got this great 2.5% interest loan on $314,000 of it. But I do have this loan delinquency, which needs to be paid off at closing, $19,000. And so the buyer came up with a down payment of $26,000, paid off the delinquency of $19,000. Their total cash for the buyer to close was $88,000 on a $340,000 mortgage. But the seller was able to walk away with $20,000. And meanwhile, the buyer agreed that they're paying $1,232.50 every month on this mortgage, but that it will be cashed out in 5 years. So the seller's name will come off in 5 years, come off that loan. So, you know, this is a great tool to help someone, a distressed owner, give an investor a good deal, and at the same time give the owner what they need to be able to move on. So I think this was Susan's example. This is wonderful, Susan. So here's something that's more traditional. Let's say this seller obviously has quite a bit of equity. They are asking for $1,100,000. They only owe $537,000 on their loan. So there is a huge amount of equity. Now the buyer doesn't have another, $600,000 or whatever to put down on this property, but they can put down $165,000. So there's still a pretty big gap. So the seller agrees to make a loan to the buyer for $935,000. So the seller puts down 165 plus 935, comes up with the sales price. So the seller's note at $537,000 is at 3.5% interest. And their monthly cost is $2,411. The buyer has a note at 5.5% interest, still way better than 7%. Their monthly payment is $5,309 a month, and they'll cash it out. They'll make a balloon payment in 5 years. So the seller comes up with, they were charged $90,000 in closing costs. They netted immediately $76,000. They made it $76,000 profit, right, on this sale. However, they also are getting monthly payments of their net monthly above what they're paying on their monthly costs. They're making almost $2,900 a month on the spread. And over 5 years, that translates to an additional almost $174,000 they're making on this transaction because they were willing to wrap the note. Everybody got that? I think that's pretty cool. That's pretty powerful to show a seller. You're gonna make a lot more money, not just the price you want, but all this interest over time. Now, they do have to pay taxes on that, but still, it's a good deal. Okay, so what's the downside? All of these examples have, well, most of these examples have downsides. Well, they all have downsides. If there's an underlying mortgage, what happens if the lender calls the underlying loan due? Virtually every mortgage today has a due on sale clause that says when this property gets sold, the loan, we may call the loan due. Yeah, Susan really stresses this. We may. It doesn't mean we will. It doesn't mean we have to. And in most cases, if the payments are still being made on a timely basis, they're not missing the payments, it's highly, highly unlikely that a loan will be called due. And I'll let Susan comment on that because that is a really important point.
Well, we close wraps regularly, and I've seen one loan called, and it's because this particular buyer and seller went through a bank that maybe did 5 loans a month, right? So they're going to pay a lot of attention, but your national lenders, they're like, give me the money, give me the money. So they're not paying, they just want the payment made. There's always that risk, but I will tell you, I mean, 99% of the time, it's not going to happen.
Yep. Now, should you disclose this to your seller? Absolutely. Absolutely. And I would explain just like Susan did, it is a risk. And you know what? This has so rarely happened. However, you should definitely consult a real estate attorney before you do this transaction. I want to make sure you feel comfortable with it. And so if it's straight seller financing or either, a wrap or any of the loan assumptions, anything we've talked about, what happens if the buyer doesn't pay? Or the seller doesn't pay the mortgage, but we'll go into that separately. What happens if the buyer doesn't pay? In which case the seller has the opportunity to foreclose on the property, get it back, keep all the money they've already received, and do it all over again. But these are the questions that sellers ask. They will ask these questions. These are the 2 most common questions you will get on a creative real estate deal. Any questions from anybody on that? So when there is underlying financing, the best way to protect both the buyer and the seller is to use a third-party collection agency. And those do exist. And what they do are they collect the payment from the buyer. They submit any payment that's due to the seller's lender. So the mortgage and the mortgage and any related fees get paid. Anything extra gets dispersed to the seller, and the collection agency also does all the accounting and sends year-end statements for taxes, which is fabulous. And I didn't realize they could hold the original deed, fulfillment deed, so that when everything's paid off, they send the deed to the new owner. It's paid in full. And here are a couple of the note servicing collection agencies: Evergreen Note Servicing, which is based in Puyallup, and Northwest Contract Collections in Shelton. I've never used either of them, but Susan says her clients have used these and she's really impressed with both of them. So there are some resources for your sellers and buyers who are doing creative transactions. And that is it. We are at the end of the presentation in less than 1 hour. Does anybody have questions about creative real estate finance.
You guys took that all in. I'm very impressed.
Well, they're trained real estate professionals, of course.
I think for me, I would like to learn more. So I don't know if Susan, if I can get Susan Schmidt's contact, and then just those little things that I still don't understand.
Is that Giselle talking?
Oh, can you guys hear me?
Yeah,
Oh, I was just wondering if I can get Susan's information just to reach out and see if she can go over some little technical things.
Yeah, absolutely. Wendy's got my information, so she can text it to you or send it to you. I'm always available if you have questions. That's part of what I'm here for. I'm a resource for you as the real estate agent. I'm not a resource for buyers and sellers.
yes. So Susan also does regular training for real estate agents, and she dives deep into the paperwork, what it looks like, how to fill it out. Her classes are free. So when are your next classes, Susan?
I actually have one tomorrow, believe it or not, and it is on seller financing, but it's down in Puyallup. It's at the Puyallup Total Wine. And then I have one coming up on next week, I want to say, or on the 17th. Let me look. And it's at the Linwood Total Wine. And we do it at Total Wine because this is so much information. We need a little wine while we're learning how to write these deals up, right?
And she gives great handouts too. So you'll walk away with the forms, sample forms filled out so you can see what they look like. The only thing that would make Susan's classes better was if she offered clock hours.
Yeah, I am at that. I just have to get certified again. This is the only class I would ever consider teaching as a clock hour class because 3 hours is a long time. Can you imagine? Most people fall asleep. So
Well, that's true. That's true. And Susan, your classes are usually about an hour, right? The
Yeah,
ones, yeah.
about two, if I combine the two, because seller financing really takes about an hour and a half, and then assumptions take about an hour. So, but by the time you do breaks and stuff, that should be the 3 hours, right?
Yeah.
So,
And
yeah.
I've attended her class, Wendy, and it's amazing.
There we go. Another testimonial. So there you go. Yeah, if you're at all interested in this type of financing, like I said, most agents do not know it. They do not understand it. You may be, if you're dealing with a listed property and you're representing a buyer, you may be dealing with a listing broker on the other side who has no idea. And they're tough. It's tough to get past those agents because what they don't, the confused mind says no. Right? The confused mind says no. But I am thrilled to death whenever I hit a listing broker who understands exactly what I'm doing. And some of them may even be offering, the smart ones are offering this financing. So it makes it so much easier to get a yes and get a deal if the agent on the other side of the transaction understands what you're doing.
What time is that class?
The one tomorrow,
Mhm.
it's at 3 o'clock in the afternoon. So it's from 3 to about 4:30.
Okay.
No.
When's your Linwood one?
My Linwood one, so the first one is going to be on 4/17, but that's the assumption class. So the assumption class, and that is also at 3 o'clock. And then on May 1st, we're doing the deep dive into wraps and seller financing in Linwood, and that one will also be at 3 o'clock. And both are at Total Wine, so you can't miss it. Linwood Total Wine and Puyallup Total Wine.
So do we need to register for the event for tomorrow?
You don't, I can send you the registration right now if you guys are interested. I'd be happy to send it out.
Please, I live in Puyallup, so that would be nice.
Hey,
Oh, I didn't know that, Lisa. Yeah. I-
Wendy, I have a quick word. Oh, go ahead.
Well, of course, I'm looking for feedback. You guys, I am not comfortable doing PowerPoint. I did these on Google Slides, and I'm just so thrilled I got through it, that I actually came up with a PowerPoint presentation that looks halfway decent. But any feedback at all on this presentation would be really helpful before I go live to clients, buyers, investors that I work with, and you're certainly welcome to send anybody to this training I'm going to be doing. So feedback would be great. And also I realized as I was going through the slideshow, Giselle, I can't see the chat. So I missed your
Oh.
questions, but
Yes.
in terms of the emails, like that was one day I got on a jag and I sent out like 10 emails. And I would say about 3 or 4 were potentially interested, and 2 ended up being a lot more serious. And I think it's a numbers game like anything else. Not everybody's going to say yes to seller financing. And the reason they don't is not because it doesn't make sense. They say no because they don't understand it.
Yeah.
That's the number one reason. When
Yeah.
Susan's nodding her head, right?
Yeah, I agree 100%. Like when he says, a confused mind says no.
Mhm.
And will you follow up with them, Wendy, on the phone after you've
Yeah.
emailed them, say you haven't
Yeah.
heard from them?
Yep,
Okay.
because then they know you're a lot more serious.
Right.
It's 'cause some of them don't think you're very serious, but if you give them a call and you say, I just sent you an offer, and I title my email, say an offer for, and I put the property address. So they're like super excited. They're gonna look at it because it's an offer on their listed property. And then I do the emails rather than writing up all the paperwork, which you guys know takes more than an hour to write up an offer. And if you're brand new, it might take 2 or 3 hours, right? So
Yeah.
doing the email, I've got a template I follow. I do look at the underlying financing and I make a determination. Do they own it free and clear? Because that makes it really easy. I'm just doing straight seller financing. And if they've got underlying mortgage, am I going to have to do, usually if I'm working with an investor, it's more likely to be a wrap because they probably won't be the owner occupant.
And not even that, it's more like they have to qualify, right?
Oh, and they have to qualify.
That's
Yeah.
something investors wanna deal
Yeah.
with. So, all right, who wanted the invitation to class tomorrow?
Eliza Perez, or just,
Okay, hang on, Eliza, and I'll send that right over.
thank you.
Are you gonna put it in the chat or are you sending her email?
I'm not technically savvy enough to put it in the chat.
Okay.
I'm just gonna email her.
Okay,
Eliza, what's your email?
Lisa, I'll just send you my personal, lisa.perez1@hotmail. I can type it too if you need me to.
Nope, I think I got it. So, perfect. And then let me know if you don't get it. So,
Thank you.
Wendy, I thought your presentation was great. So, there's a lot of information. Don't be surprised. So like if these guys are like, wow, it's overwhelming, then sellers are going to do that too. So if it took us an hour to get through it, you're going to plan that your class is going to probably take an hour and a half to 2 hours because that's how many questions you're going to have.
well, yeah, especially with a lot of people on it and people
Yeah.
that aren't real estate oriented.
Yeah. But it was great. I thought it was very well done. I thought you did amazing. You sound like you've done it, hundreds of times. So,
Yeah.
I mean, that's half the battle.
Yeah, I've talked about it so much, but like I said, I'm just not techie in terms of PowerPoint. To me is techie. I have a really, it's like, no, it's a piece of cake for people that do it all the time, but I don't. And so just being forced to put together a presentation was really great. It was
Good.
good.
Well, it ran
Proud of my
smoothly
trip.
and you were able to share it while doing Zoom and all of that. Like half the time, I feel like that's where you end up with, like somebody would end up with a glitch. So
Yeah.
good job.
Thank you. Thank you.
That was great.
Yeah.
All right. Well, thank you guys. Thank you for all being guinea pigs. You can send me private messages with any tips for things that I might try doing differently. Internet worked, the lighting worked, my computer worked, fingers crossed. I do have it. I put it out there that I am going to do this for my clients and, other investors that I know on Wednesday at 4 o'clock. Wednesday at 4 o'clock. So I have a couple days to do some refinements or practice or whatever. So invite anybody you think might be interested.
That's awesome, Wendy. You know what I'll do? Do you want me to call Amy? Even though I can't be on the call, if you want me to see if Amy wants to join you, maybe she can talk about general title stuff. If that helps you, I'd love to. If it doesn't help you, then I won't.
Well, it's going to be, I don't know how many people will be on. It might be a lot. I know when I sent out my initial database, I got 21 responses.
Well,
the
that's
next day.
great.
21 people saying, yes, I'm interested. Whether they can all make it on Wednesday, who knows? So
Yeah.
yes, I think it would be very nice to have Amy there, and it would be very nice to let people know what a great resource Ticor Title is.
Great. Thank
So-
you. I would love to. Okay, I'll reach out to her right now. So
If she can, it would be
yeah,
great.
for sure. In the meantime, if there's anything I can do to help you, let me know. I'm happy to.
All right. Thank you,
So,
Susan.
thanks,
Thank you,
everybody.
everyone.
Thank you guys.
Thank
Thank you.
you. Thank you, Wendy.
All right.
Thanks, everyone.
Bye-bye.